Welcome back to the Nomad Hedge, everybody. In today's video, we will be taking a look at the S&P 500 and the general indices. And so when we take a look at the S&P here, we can see that from our previous video, we looked at this here as potentially being wave 3 and 4. And so that was the minute degree. And so we're looking at the minute degree right here. And we have done a few changes here, but it doesn't really matter. Even if we would have concluded wave 3 of minute degree here, or basically right here, which we've changed up to, wave 5 could literally have ended here either way. So we're looking at wave 5 right now. Either we're going to see a continuation in a break above this trend line here, or we are in fact getting rejected. So we can see that we have tested this trend line here multiple times now. But one thing to remember is that a trend line also gets weaker the more often you test it, okay? So if we take a look at beneath the surface right here, and we can do so by taking a look at the 4-hour chart. And so we can see here potentially that we're looking at the conclusion here of 5 ways, right? So we have 1, 2, and then you have a 3, 4, 5. And then that sets the stage then for last move here before proceeding higher, because the 100% extension, or the 1.618, it's basically from this level here. So we could look at a 1, 2, 3, 4, and then you have that last wave push here towards wave 5. Another way to look at this is obviously if this is a 1, 2, where you have an A, B, C, and then that's basically a 1, and then 2, and then you do have a 3, 4, 5. And that's basically it for wave 5 of the minute degree. And so if we move back to the daily chart here, we can see that we're still within these ranges from wave 3 to wave 4 where we're not overlapping. Okay, so if we're not overlapping, that means there's still potential here for the S&P 500 to move much higher. And another thing, if you followed along here, we have been looking at auctions in the market, and there's a 30-minute auction here right at this price level here. So either we're going to close this one and move lower, and that means we will begin to overlap here, right? So wave 4 goes below wave 1. That means we could raise the bar here and say that we're likely going to see further decline in markets. Or if we're starting to receive support here and bounce from this level, then the market is going to likely go higher from here. And so that's basically how we view the S&P 500 for now. We're still open to the fact that the S&P could move higher here. We could be setting the stage here for a 1, 2, 3, 4, 5, right? And then that will be the conclusion of wave 5 right there. Or we are already finalizing wave 5 here, and that we will begin to look towards an 8 to 10% correction for the general indices. And the reason why I say 8 to 10% correction is because we do think eventually that there's a possibility that we will just retest the former wave 1 primary, which is right there. So this level here has acted as resistance, and now we are crossed above it here, and 10% correction here would just be a retest of this level, and then we're setting the stage for a minor degree to begin. That is why it's important here to highlight where exactly we're going to begin to see some distributions in the market. And if you take a look at this thing again on a weekly chart, and I've highlighted this many times previously, is that as long as we're above that 8 EMA on the weekly, there's no reason to be bearish at all. Okay. Now, we can see here in the crypto markets that we're seeing a lot of distribution already. So that could be an early sign that the markets are heading lower, because cryptos tend to lead the markets forward, but they could also find support much faster and begin to rise as well. So that's why we highlight this. We look at the 8 EMA here, and as well as this level here. So we're basically watching this wave 1 here. So we're starting to, if we're starting to break below this level here, and breaking this level here, we could be pretty sure that the market is likely going to head lower here. So watch this 21 EMA here on the daily chart, and that failed auction here, the 34. We need a break basically of this level here. Then we're likely going to see further distributions in the market, and then we can look at that 8 to 10% correction before finding further support. So that's pretty much it for the S&P 500. We're also going to be taking a look at the QQQs, and basically it's the same story here. We can see that we're already seeing a break here of the 8 EMA on the daily chart. We're seeing a lot of gaps here, so we're still above that wave 1 potentially. This is a level that we can't break, and if we're starting to break that, then we're starting to overlap. So it gives us more confirmation that the market will head lower. That doesn't mean that we can't find support here and, setting the stage then for another bounce up here. So pretty much the same thing as the S&P 500 or the SPY. We can also take a look at the Russell 2000. And the same thing here. The Russell is already beginning to break a trend here. We can see that the Russell is breaking below this trend, right? So it could be the end of this entire move here. But we view the Russell 2000 a little bit differently. We think that the minor degree already started back here. We tested the 233 EMA, and that means the S&P 500 and the QQs haven't tested the 233 EMA, which they eventually will. And so the Russell 2000 is setting the stage here for a minor degree test here. So we're looking at a wave 1-2 and another wave 1-2 here, right? So you have a subdivision of this higher degree wave. And so that's basically how we view the general indices. We're going to take a last look here at the Dow Jones Industrial Average. And we can see here that the Dow has actually already overlapped this wave here, but that could still be in question, because we could take a look at this and say, well, maybe this is wave 1, right? And then you have a subway here, wave 1, 2, 3, 4, 5, and then basically that's your wave 4, right? So you have a wave 2, 3, 4, and then you get that last push here. The Dow Jones Industrial Average is telling me that we are in the process here of likely seeing further distributions. That's your classic throw over right here, where the market is knocking out the short sellers, and then we have the decline. So I'm trying to look for signs where the market is headed, and so the Dow Jones could be a primary way to look at it. But again, we could still see that, last push here. And that is why, if we're still holding about that 21 EMA, especially the 34, I'm still remaining bullish here in the markets. And we can take a look at this thing on a weekly chart. And we can see here that we're still above that 8 EMA on the Dow Jones as well. So nothing to be worried about as long as we are above these levels. And if we're starting to break these levels, that's when we should turn bearish, in our opinion. So that's basically how we view this market. If you haven't already, you can like and subscribe to the channel. You can follow me on my social media handles. That's it for today's video. I'll see you guys in the next video. Take care for now and have a great rest of your day.